Hey everybody, it's Gloria Ortiz with Real People Realty, or some of you may know me as Glow, as in #Go with Glow. Today's Formation Friday is going to be about taxes and the IRS. That was a good time to do this video since we're upon tax season. And I'm sitting here with Leif Jensen, who's actually been my accountant for the past 10 years, with Leif Jensen and Associates. And we're going to talk about just a few things that sometimes may go down during the tax season when you're putting your taxes together. Maybe you may claim something extra that's not 100% legit or kind of stretch the truth a little bit. So I wanted to talk to Leif today about what happens. You know, if you get an audit from the IRS, how far back can they go? What's the penalty? What can happen to somebody? How are you?
Okay. So typically in that, so with the IRS and that, so they can freely audit back, so for 3 years in that, so from the current, from the current reporting season in that, but, if there's any indication of, willful fraud, they can actually go back as far as they wish in that.
So I know normally in the past, people would always say, keep your records for 7 years. But what you're saying is they can go back 15 years if they want.
Exactly.
Okay. So there really is no rule or limit. The IRS can go back as far as they want to go back.
For fraud.
Fraud.
For normal, people in that have not been rampantly cheating on their returns in that, if you keep your reports for, 5 to 7 years in that, you should be fine.
So, and let's make it clear, that's if they suspect fraud. It doesn't mean that you've been found guilty of it. They suspect it, so now they're going to start investigating.
Well, so what they're going to do is they're going to, they're going to investigate the more current stuff, and then if they find, if they find things that are, significantly questionable in that, and then they, are able to prove fraud in that, they're going to keep going back, further and further in that because, it's in their best interests.
Yeah. So what are the what can happen if somebody is caught defrauding the IRS?
One, you're looking at, all the returns are going to be, opened. They're going to assess penalties. They're going to assess interest. They're going to, potentially levy or, they're going to put liens against your properties in that. They're going to levy your accounts and.
Ooh, when you say levy, doesn't mean freeze.
No, it means that they're going to take the money out of your bank account and put it into their pocket.
Wow. Wow.
I've had clients who have owed the IRS money, who, weren't on a payment plan, chose not to pay the IRS. The IRS, imposed the levy and, then took the money out of their account and they were arguing with the IRS saying, I was trying to get the money to pay it. It's like, well, it's already paid now. We got the money.
So basically what I'm kind of hearing in a nutshell, Leif, is that no amount is ever worth it to try to defraud the system. There's sometimes people who may claim an extra person, find an extra social security number.
Well, what's happening in that now, with the tax law changes in that, so you no longer get, exemptions in that for dependents in that.
Okay.
So they've done away with that, obstacle in that. But again, there's a multitude of ways of minimizing your taxes in that doing it in a legal fashion in that, as opposed to, doing something untoward and, putting yourself in future jeopardy, so when you don't need to.
Wow. So one thing that I do that may help me, I have records for years and years. I've been doing real estate for 13 years. So I put them on a flash drive. And then I may get rid of the paperwork, but I scan everything in and I put every year separate on a flash drive in case for whatever reason I ever need it. But I'm very detailed, I would say, right? In my record keeping, everything is detailed out, why I went there, what this is for, who the client was, just because I never want a question, to arise. So it's...
No, and your record keeping in that, has been impeccable in that, and, that definitely helps. Right now I have a client, that's in the middle of a sales tax audit and, they're trying to look for receipts for 2017 and having difficulty finding those receipts, because they have not maintained the records the way they should have. And so, what's going to happen in that is, there's going to, potentially be rulings against them in that, for not having, that backup material.
And then one last thing I want to touch on is, Sometimes people think, well, they can just file bankruptcy. You know, if something happens with the IRS, we could just file bankruptcy. But it's not always that easy,
No,
especially.
if there was any fraud involved in that, see, the courts are not going to dismiss, say the IRS's claims against you in that, say, and, see, I've heard hearsay evidence in that of various claims in that, see, where, see, the courts have said to wipe the file in that, see, but the IRS has not wiped the file in that and continued after the clients in that, see, afterwards in that.
Wow.
See, luckily none of my clients in that, but, I've heard some of the horror stories.
Well, thank you guys so much for tuning in today. My contact information is on this page. If you have any questions in real estate in general, or looking for someone to do your taxes, need advice of a good accountant, let me know. I'll put you in direct contact with Leaf. Thank you guys so much. I'll see you next month.